Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday, the 14th of November. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, the UK's Chancellor Rachel Reeves considers abandoning plans to hike income tax in her upcoming budget.
An unprecedented slump in investment highlights China's faltering economy.
Plus, from watchdog to top dog, the EU prepares to unveil plans for a major transfer of powers to its markets regulator.
Let's start with a roundup of our top stories.
In what could be a major U-turn, the British Chancellor Rachel Reeves is considering dropping plans to raise the headline rates of income tax and several other levies in the upcoming budget. The pound has weakened against the dollar and the euro on the reports. The development comes just days after the government lurched into a new political crisis amid allegations the Prime Minister was about to face a leadership challenge. With more, here's Bloomberg's Chris Pitt.
10 days ago, Rachel Reeves delivered what was a highly unusual pre-budget speech in which she declined to reiterate Labour's manifesto commitment against broad-based tax hikes. And just this week, she doubled down on those comments in this BBC Radio interview.
We are having to look at taxes and spending, and it's got to be both of those things. And the speech I made last week was about setting the context for the budget, which is a difficult one.
But now, sources tell Bloomberg the Chancellor is considering not going ahead with increases in either the basic or higher income rates of tax after internal concerns that such a move would break a manifesto promise not to raise taxes on working people. She's also understood to be reconsidering whether to proceed with an exit tax on wealthy individuals leaving the UK. All of which raises the question of how Reeves now plans to fill a black hole of as much as £35 billion in her November 26th budget. In London, Chris Pitt, Bloomberg Radio.
Well, now to China, where economic activity cooled more than expected at the start of the fourth quarter. Data shows an unprecedented slump in investment and slower growth in industrial output, adding to a drag from sluggish consumption. Industrial production climbed 4.9% last month from a year earlier. That was down from 6.5% in September. But Citi's CEO, Jane Fraser, has told Bloomberg that the deal struck by Presidents Trump and Xi Jinping should now help to ease economic relations between the world's two largest economies.
I think the recent truce has brought some much needed and welcome stability here. I think we're in a position now for both sides that wanted to have a period now where we can move ahead and have a more stable relationship between both of them. It's transactional, but it's in both sides' interests.
Citi's CEO Jane Fraser also told Bloomberg that the bank is now growing rapidly in China, with reviving interest from both investors and companies.
US President Donald Trump is readying substantial tariff cuts as he seeks to address voter concerns over high food prices and the cost of goods. He's announced framework trade deals with countries including Argentina, Guatemala and Ecuador, aimed at cutting trade barriers on products like bananas and coffee beans. Stubbornly high inflation as well as weak labour data has driven a growing divide among Federal Reserve policymakers on the path ahead for interest rates. Cleveland Fed President Beth Hammack thinks the US Central Bank should hold rates steady.
When I look at both of those things, on balance, I think we need to remain somewhat restrictive to continue putting pressure to bring inflation down towards our target.
Cleveland Fed President Beth Hammack there, adding that businesses have absorbed much of the tariff-induced inflation so far, but are now looking for ways to pass on costs to consumers.
The BBC says it has apologised to US President Donald Trump for a misleading documentary edit of his January 6, 2021 speech. Chairman Samir Shah wrote to the White House expressing remorse, but separately the broadcaster challenged President Trump's legal threats and rejected demands for compensation. BBC former director Jamie Angus says a payout is unlikely.
I'd be very surprised if the president ever got a significant payment out of the BBC, and I don't think it would be appropriate really for the BBC to pay public money to the president of the United States.
Former BBC director Jamie Angus speaking there. Their apology comes after Trump's attorney gave the network a deadline of 5 p.m. New York time today to apologise, retract the documentary and compensate the president or face legal action. The BBC says that it won't rebroadcast the documentary in question, which is titled Trump, A Second Chance, on any of its platforms.
The European Union is finalising plans for a major transfer of national powers to its markets regulator. EU officials are looking at how to transform the European Securities and Markets Authority into a more sweeping watchdog like the SEC in the United States. Bloomberg's Freddie Fulston has more.
ESMA, the EU's market regulator, was founded after the financial crisis to expand regional supervision. Now, Europe is centralising its powers in a drive to boost growth. The EU Commission wants it to be one empowered authority. Under the plans, it will have powers to supervise crypto firms, trading venues and clearing houses. In London, Freddie Fulston, Bloomberg Radio.
Franklin Templeton CEO Jenny Johnson says artificial intelligence is moving quicker than she expected in the finance industry. Speaking to Bloomberg's Farsi Lakwa, the asset management boss said the technology will make the investment process more efficient and more effective.
It's going to have agentic AI. It already does because we have a first development of it where it'll go out and kind of learn itself and say, hey, is this interesting data for you, right? And so if you can do that well, such that that advisor says, I love meeting with Franklin Templeton because those meetings are so valuable to me, that's going to be a win.
Jenny Johnson speaking there. You can hear that full conversation on the latest episode of Leaders with Lakwa, available now on the Bloomberg website and on the terminal. Jenny Johnson's comments come after Franklin Templeton partnered with Microsoft to build a financial AI platform last year. According to Johnson, the firm, which oversees more than $1.6 trillion, is also developing an AI tool to scan data and identify themes without human interference.
To some breaking earnings news this hour. The Swiss luxury giant Richemont has reported a much stronger rise than expected in sales in the first half of its financial year. Sales at constant exchange rates rose by 10%. Analysts had forecast a gain of just under 7%. Richemont saw a return to growth in the most recent quarter in the key China, Hong Kong and Macau regions, while other regions maintained their solid sales momentum.
Those are our top stories in the markets. Asian stocks stumbling. The MSCI Asia Pacific Index is down 1.4%. Tech firms leading the declines. A real shift in sentiment after Fed officials, including Beth Hammack that you heard earlier and Neil Kashkari, dampened expectations for a December rate cut in the US. US stocks 50 futures this morning are down by 0.3%. It's mixed also for US futures. Remember, European shares closed at a record high just on Wednesday. The pound is down, currently 0.3 lower against the dollar. The FTSE 100 also closed down 1% yesterday with the political uncertainty. Bitcoin is notable because it's slumped below $98,000, down 20% since the beginning of October. And oil prices, Brent crude futures up 1.6%. The risks to Russian flows are mounting, and that seems to be outweighing concerns about a global oil glut. Those are the markets.
In a moment, we'll bring you the latest on the UK's budget, plus the weakening picture for China's economy. But something else I've learned from a Bloomberg story this morning, how difficult it can be to get an old watch fixed. Now, I have alluded to before that I have no interest in watches, but I actually think I'm becoming interested because of Chris Wavsar and his writing on the Watch Club newsletter as well. He has this great story about he has a 1950s watch, a Girard-Perregaux triple calendar model, but the day and date indicators were jammed. So he went on this journey to try and find somebody to fix it. He went to a watchmaker friend who contacted the manufacturer, who basically said, good luck, I can't believe one of those still exists. He went to a local watch repair shop in New York, and then went eventually to a digital company who he sent away, first of all, pictures of the watch. They gave him an estimate. He sent it away. They updated him throughout the repair about the things that they found that had to be changed and parts that, when they opened the watch up, they found needed to be worked as well. And he got it sent back as well. He's delighted with the repair too. This is, people really do love their watches, as we know, Caroline, and the extent that you can go to try and find the precise pieces to repair something, even something small, if the day isn't changing over on your watch, does it ruin the start of your day?
It does. Look, I'm not a watch nerd, as Chris dubs himself, but I am actually weirdly someone who quite likes watches. I love wearing a watch all the time. And actually, over the years, I understand the appeal. They can become so strangely meaningful. Like, I can't imagine my dad without his watch now.
Yeah.
So I absolutely love the repair story, to be honest. And yes, it's maybe not about, I mean, he also went to the Watch Awards, which is like an industry event, and the timepieces are gorgeous and obviously fabulously expensive. But I think even the run-of-the-mill timepiece, when you wear it, for a long, long time, it just does become part of you.
Chris, he has a feature in the newsletter where he asked people to take photos of their watches. So this time it was his barista that he got a photo of his watch as well. It's a great story. Well worth signing up to the Watch Club newsletter to get the latest from Chris on the watch world too. You'll find it, linked to it in our podcast show notes as well.
Now let's bring you more on the UK budget and our reporting that the Chancellor is considering dropping plans to raise income taxes. Our reporter Tiwa Adebayo joins us now with more on this. Good morning, Tiwa. What is the latest then that we actually know, given the tremendous amount of budget speculation there's been?
Yeah, Caroline, this has been something of an ongoing saga. And up until now, most of the market and the media have been operating under this sort of working assumption that the Chancellor will be raising taxes in some way in her upcoming budget announcement. Those hikes were heavily thought to perhaps include plans to raise the headline rates of income tax. That's something that was alluded to, if not confirmed, in a pre-budget speech last week from the Chancellor, where she essentially set out her economic thesis statement. She said that she has to deal with the world as it is and not as she would like it to be, a sort of foreboding tone, which many took to mean that she was abandoning the Labour Party's manifesto pledge not to raise taxes on working people. But late last night, we got some exclusive reporting from our Bloomberg Politics team that says that essentially Reeves might not be so sure about increasing income tax after all. That's after the FT first reported that she was wavering on that point. So Bloomberg are citing sources saying that essentially the Chancellor has prepared two budgets, so one with and one without the more controversial tax rises, so namely income tax. And in the alternative, we've got lots of smaller hikes. It's worth mentioning that the pound and FTSE 100 futures fell on these reports. And so we've really been left in this quite unusual situation where less than 2 weeks away from the budget, and after a big speech which was meant to sort of lay the foundations and perhaps achieve clarity, it looks like the Chancellor is still deciding between two quite different economic paths for the country.
So what are the alternatives then if it's not income tax that would go up in the budget?
Well, according to the sources, that second budget plan, if you like, includes quite a lot of smaller tax hikes, as I mentioned, instead of those big increases to headline rates of income tax. But there are also perhaps some more creative measures like other changes to the tax code. But our reporting says that Treasury officials are really still considering dozens of potential policy reforms. It seems like at this point there is still so much more on the table at quite a late stage than there usually is in terms of previous budgets. And so according to Treasury sources in our Bloomberg stories, it seems that no one is really exactly sure what's in either of the budget plans and also what exactly is going to be announced on November the 26th.
Is it also important politically for the government not to break the manifesto pledge over income tax? Because you mentioned, that it's the Chancellor's choice. It is ultimately, but obviously it needs MPs. It's about cabinet agreement and agreement with the Prime Minister too. This is so deeply political and it involves, the manifesto pledge.
Yeah, you're right, Caroline. It's very political and it's coming at a politically precarious time for the government. It's important, I think, in this to look back at the context just of this week. We've seen a media storm over reports that the Health Secretary, Wes Streeting, was mounting a leadership challenge to the Prime Minister. Keir Starmer even had to apologise to Streeting for media briefings on that, supposedly from his allies. And the government does seem to be slightly insecure, and much of it is in relation to this budget and, crucially, the potential dropping of that manifesto pledge not to raise taxes on working people, which it seems would be very unpopular amongst the electorate, at least. But the Bloomberg reporting is saying that there is ongoing conflict in the cabinet about these budget plans. So it's being reported that Reeves favours her first plan, which is the income tax hike option, but she's facing political pressure to find the alternatives. And it seems that's where this second budget plan has come from. And it will likely be on the mind of the government and the Prime Minister that they need to keep not only the public, but also their own party on side here. Going back to that leadership challenge, we've got a story on Bloomberg saying that Wes Streeting, on the latest odds, is now overtaken Nigel Farage as the favourite for Prime Minister. So that's really significant. It shows that there's a lot riding on this budget. They are credible opposers perhaps to Keir Starmer's position, but there's a lot riding on this, not just for Reeves, but also for the future of Keir Starmer and his government.
Yeah, a week is a long time in politics too. Adebayo, thank you very much for joining us with the latest reporting on what to expect from the budget in the UK.
Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now to China, where the economic data shows activity cooling more than expected. Our China economy and government editor Alan Wong joins us now. Alan, hello. Talk us through the data. It was a big data dump from China today. Where did we see particular weakness?
Yeah, the weakness was really across the board this time, and frankly, worse than what most people were expecting. The biggest shock is in investment. Fixed asset investment saw a record decline for October. And Bloomberg Economics actually estimates that it plunged as much as 12% in October alone. That's just 1 month. But it wasn't just investment. We're also seeing that factory output hit its slowest growth since the start of the year. And crucially, the consumer is still pulling back. Retail sales slowed for a fifth month. So when you add that to the surprise contraction that we already saw in exports earlier this month, it really shows weakness in investment, in industry, and consumption. These are all the main components of the economy.
Is it enough, though, Alan, to provoke more stimulus from Beijing?
Yeah, you would think so, but the signals that we're getting immediately in the immediate aftermath of the release suggest not yet. Beijing's statement talked about actively facilitating the implementation of existing policies, which one could reasonably read as we're not rolling out new stimulus right now. So the feeling is that while these numbers are soft and softer than expected in most cases, they just aren't bad enough to trigger any sort of a panic response. Beijing seems to be just saving its policy options for next year, especially because achieving the 2025 growth target, which is about 5% growth, still seems pretty much doable without intervening right now.
That's interesting. What's the outlook then from here? Because Beijing's next 5-year plan starts from next year. Do you think that will tackle any of these issues?
In the short term, the attention will be on the stimulus that Beijing already approved. There's a total of 1 trillion yuan since the end of September that should really start to kick in the coming weeks. They're also hoping that the trade truce with the U.S. Struck late last month will give China's exports some boost. Now, about the 5-year plan, that plan is really about the longer-term fix for the economy. It's expected to tackle the structural issues that we've been talking about, for example, getting people to spend again. So there are proposals like better distribute income across the population and strengthening the social security system that makes people feel more secure financially and encourage them to spend more. That's a long game, but for now, they are relying on the stimulus that's already been announced and in the pipeline. So China, in the longer term, also has increasingly emphasized the quality of growth, not just the sheer quantity of it. So I think we can expect some sort of a transition period, but in the meantime, China feels pretty comfortable about reaching the immediate growth target for the year.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.